Hi, this is Zak Mir with the Share Talk Bulletin Board Heroes on Friday, the 15th of June. Starting off with a blast from the past, at least for me, Batm Advanced, where we've got a very strong recent price action, quite a long build up here with the Golden Cross in October, sideways consolidation, mostly above the 50-day moving average and well above the 200-day line. Scenario here is that we could see, well, the current breakout above 30p could lead up as high as 50p, which is an August 2017 resistance line projection, and that target valid while we hold above this uptrend line from October and the 50-day average at 27 pence. So we would expect a reasonable acceleration there over the next 1 to 2 months. Next up, a stock which I highlighted a few days ago, I believe. One of my favorite patterns at the moment, basically a cup and handle type reversal there, just breaking through or just broken through the 1 pence level and the initial highs of June. This should shoot up towards February's resistance around 2 pence and the 200-day moving average over the next few weeks. It was nice that you had that spike in volume a few days ago as well, along with the share price, and this V-shaped bull flag, as I describe it, looks as though it will take Eqtec higher, only really back below the 50-day average, which is miles away, would really cast the upside argument into doubt. Perhaps if you're looking for a stop, it would be around the 0.8 area, which was May resistance before there was a slight pullback. So probably that's the hottest looking chart at the moment in the small cap space, well, at least that I've noticed. Stock which is big on the bulletin boards literally at the moment is Batm, where we've had the gap down through the 50-day moving average, normally not a great event. All eyes on here is in terms of the technicals will be whether the shares can hold above the 200-day moving average at 9.56. I think that's the main line in the sand at the moment. While we're above that, then the current dip is a buying opportunity, but you would have to be pretty strict in terms of the money management on any breakback below the 200-day line. A favorite from the recent past has been Seeing Machines, and time to upgrade the upside argument here. We had the gaps through the 50-day average, one of the favored signals there. Another gap off the bottom of this rising trend channel from April, but a V-shaped consolidation here, and really break of 12p should lead pretty quickly towards the 15 pence area, maybe much more really, given the way the shares have this very, very strong configuration. In fact, one could probably project it along the lines of wherever that resistance line projection reaches over the course of the rest of the year. So very sprightly indeed. Name that many follow as well is Upland Resource. You can see how it broke back below the trajectory set before it in the early part of the year. Probably now one would be looking for the stock to go back up towards the previous highs around 4 to 4.5 pence. Only then can we then look for the target, which was around 6 or 7 pence at the beginning of the year, to be hit. But a decent end of week close above the 50-day moving average, currently at just under 3 pence, should and would hopefully start the rehabilitation process here, or a resumption of the breakout that the shares delivered. Next up, we've got a stock which has been one of this week's highlights, Valirx, getting some decent momentum here. End of day close yesterday above the 50-day moving average, which is what we were looking for, and it looks as though it's on its way towards 4.5 to 4.75 pence rather over the next few weeks. Stop loss, I would say at the moment, back below, just below the 200-day average at 2.67 pence should suffice. Stock which I chickened out of looking at yesterday, which I think slightly disappointed in myself, because I think it would have been a good bullish call. But basically, I think 35 pence is a sort of pivotal number here. Above that, we can look for a retest of the 50 pence plus area that we had briefly during the middle of the week on Tern, and only really back below 30 pence on a sustained basis would even would suggest that this stock is or has run out of steam. Finishing off with a stock which I try not to look at as much as possible, given how difficult the fundamental situation is here. But just in terms of the technicals, looks as though we're in some kind of wedge formation. It's a falling wedge, which is normally a bullish formation. If you are a fan of the company, which maybe there are some people who are still left in that boat, you'll be looking for either a break of this resistance line from December or the 50-day moving average at 1.46 pence on an end of day or end of week basis before assuming that the worst is finally over here. But clearly there is some kind of positive consolidation going on at the moment. Obviously, the stop loss there, which you would enforce very strictly, would be if the shares went back below a penny. That's it from me. More on Monday.